The following is a presentation of TFNN. The Bull Bear Nadex Options Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Bull Bear Nadex Options Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 217. You get the Nasdaq up 95. S&P's up 26. Gold contract flat, $12.30 an ounce. We have silver up 11 cents, $14.71 an ounce. Light sweet crude up 85 cents, trading at $69.50 a barrel. Notes and bonds. You get the 10-year note down 6 ticks, 117.29. 30-year bond off 17, 137.19. Now, both notes and bonds, folks, last 3 days have rejected price, lower price with light volume. We'll see if that's going to shake out today. Thus far, that's what it looks like. King dollar. King dollar's down 113 ticks, 95.525. And what happened with King dollar is going into its swing point. Had some decent volume, but that seller or sellers are laying right there, and they just don't want King dollar to get over this swing high. Euro's at 114.90 to 1 US dollar. The yen is trading at 112.5 to 1 US dollar. We got option expiration out here today.
Nothing like another volatile day, man.
You get a volatile day. Home sales come in. They were weak.
Yes.
Last, let's see what we got here.
5.15 million versus 5.29, I believe.
Yeah. And, you know, they're basically talking about, like, okay, is it the aspect that the tight supply, up on prices, up on interest rates? I'd say it's all of it.
Yes.
That's the bottom line.
Sure, definitely.
You know?
Right.
It's going to be a deal whether, you know, how much cash are people making, what can they afford, and if, in fact, and I think this is going to be a big play going forward, your mortgage, my mortgage, do you really want to move?
Sure, right? Because then you got to lock in a different mortgage.
Then you got to lock in a different mortgage, and
Yes.
it's a big number, folks. So that's going to get, you know, and specifically what I mean is that you bought or you didn't have to buy, you just even remortgaged your house, let's say 7 years ago up until almost 2 years ago.
Yes.
Okay, bottom line, you're at maybe some of the lowest rates that we've ever seen.
Yeah.
You know?
At least in the ballpark of them, right? Whether it's, what, 3.75, 4%, 4, whatever.
Mine's 3.75.
Right, somewhere around that, right.
Which is unheard of now. It's like, oh, my God.
Yeah.
You know, it's like, okay.
We're closer to 5% now.
Yeah, exactly. 877-927-6648. So let's go take a look over some of the, there's some big numbers here, man. Now this one is a shocker, right? Watch this. Procter & Gamble. Procter & Gamble, folks, is up $6. You're talking about 2.4 billion shares outstanding. You've never seen, well, I haven't seen Procter & Gamble move like this, okay? This is almost like, well, nor do I. This is the most it's ever moved in a decade. Let's see what they're saying. So Procter & Gamble posted its biggest increase in 5 years in key sales measure last quarter. Gains in skin cream, healthcare, yeah, skin cream and healthcare.
Yes.
Would make sense. Okay, let's see what we got.
So they're up 7.8% on Friday, the most since 2008. And then organic sales, which exclude items like acquisitions, currency effects, yada, yada, right? Rising 4%.
It's a big number.
More than double the gain projected by analysts.
Yeah.
Quite a number for sure.
It is.
Yeah.
So we get this. So I'm just curious as to what they, number-wise. So, yeah, they're a monster. 16.7 billion.
Yeah. And you can see the type of growth numbers they're dealing with, which is almost non-existent, which is why you have a company that is not prone to the type of moves that we're so used to in the likes of Netflix or et cetera. I mean, they're a company that's worth $215 billion, and they have very little growth. You know, they have a PE of about 20.
Yeah.
So popping 8% in 1 day is quite a number on a company like that.
Huge, man. And they're paying 3.5%, 3.3% in a dividend.
Yeah.
The thing that's intriguing too is that, I mean, like, you know, that they bought all these large companies. It's like Gillette, okay? They buy Gillette, and then all of a sudden, you know, you get Harry's, and you get all these other ones come out that, like, whoa, you know, it used to be like Gillette and Schick and a few others,
Sure.
and then all of a sudden you get the specialty ones coming out. That's got to be denting them.
It's always remarkable. I say I went to the school with one of the kids that started at Harry's, and they also started Warby Parker, which is an amazing eyeglass company.
Told me that.
Yeah, that's the mammoth of their consortium right now. And I say theirs, he's involved in Warby Parker.
Okay.
The kid I went to high school with is involved in Warby Parker, was one of the co-founders, but he is the man in charge of Harry's. That's how it came down. Yeah, but you can see they're both, just like you're talking about, where they found an industry that was ripe.
And the spread was way too much. Exactly.
Right. So you had glasses.
Yeah.
Anybody wearing glasses? You've told the stories, the insane markup.
It's insane.
And then they have razors, same thing.
Right.
It's insane markup. Pretty cool. Yeah. You know, just I happen to be Oxford Exchange. Have you ever heard of them? So that's a restaurant. It's at least in Tampa. Not sure where they are.
Okay.
And it's interesting. So I was roaming around Tampa last weekend. Oxford Exchange was in there, looked for a place to eat. It was packed house right by University of Tampa is where this is.
Yeah.
And then I stumbled down the hall, and what happens? It's a Warby Parker. Like, it's like this huge glass. And it's just cool how they had kind of intertwined into this building, and they're really online, but now they've become so big that it's that presence where you're so big online that now you start coming into retail too.
Right.
Pretty cool.
Gotta love it.
Yeah.
877-927-6648. Let's go take a look at that gold market. So, you know, we got a Friday in the gold market. The good old dollar, you know, this week has been going higher. You know, it hasn't bothered gold yet. I mean, we're hanging, you know, at these highs out here, 1230.
Yep.
It doesn't look to me like it's going to break topside today, but bottom line is that it's an impressive move in the context that if we go over and we take a look at the dollar, what you're going to see in this index is that, you know, we got up here and it has volume behind the move. Now, this is where this is really deviant, folks, okay? So picture, yesterday we did 23,000 contracts. The day before, you did 24,000. Now, you know, we're coming into the same 25,000. We're really coming into this downdraft over here, which is a different contract, but there's not a huge amount on the downdraft. There could be like 23, 24. The thing that I'm looking at, I'm saying to myself, man, whoever this seller is, man, they're just laying there, you know, because it looks to me like this thing just can't handle this price structure here. And, you know, the range is so tight because we're not at the top. The top of the range would be like the 96.50.
Sure.
And this bottom of the range is just as tight, meaning that there's no sellers when we get down to that 94.
Just like there might be no buyers, though, as we get up to 96.
Exactly.
Instead of saying that there's just a seller, there might be just no buyers. You know?
Right.
Yeah.
So it's going to be intriguing watching this whole thing shake out.
At least not enough buyers, no matter what.
No, there's no doubt. And, you know, I did the workshop last night.
Yeah. Nice job. Great workshop, for sure.
Yeah. And, you know, you still have a shot to get in it, right? Well, to do the archive, right?
So I mentioned, I mean, we still have the information on the front page of TFNN in terms of your gold report. You can slide down here. There's the gold report. There's kind of what you talked about.
Yeah.
Right after we jump off the air, I'm going to get with the producers. We'll get that archive up for the subscribers. So anybody who is a gold report subscriber right now, look for that to be on your members page by about noon Eastern time today. And for anybody interested in getting that, you can sign up right now. You gain access to the gold report. You'll get that archive workshop. And then, of course, you get the gold report. You know, new issue every Monday morning with updates as they come about. Great time for that gold report as we see gold getting a little bit of volatility.
And, you know, what I do want to show everyone right now, when I was doing this, every time you do these...
Don't give them away all the info.
I got to give everyone this one.
Perfect. We're perfect.
As soon as we come back, I'm
love it.
You know, because it's important.
Did you time that? Well done. No. We'll take a break. Hang tight.
Tommy and I are coming right back. We have the Dow Industrials right now trading up 180, Nasdaq up 87, S&P's up 22. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow right now is up 184. You get the Nasdaq up 82. S&P's up 22. So if we take a look, we're going to take a look at the gold and the silver market. And this is important in the context of where you want to position yourself, folks, if you happen to be in this market. So I'm going to take the gold contract first, put it on a 20-year chart so you can see how this is set up on a much bigger basis. And what you're looking at here, okay, so 2001 is when the baby started going topside. Well, that was the lows. 252 is the low. The high gets out here at 1920. That was in September of 2011. Well, when you take the high to the low, you know, in this contract, bottom line is that you did a 50% retracement of the whole move. Now, theory-wise, Fibonacci theory-wise, a 50% retracement is a normal retracement in a larger move, whether it's down or up, okay? Doesn't mean that you have to go to higher highs again, but a 50% retracement is saying that, okay, that's a normal move in a market. That's saying that, yes, gold can go back to 1190, or it could be an ABC structure on the way up. On, you know, and we're looking at, when you're looking at a monthly chart, you get more clarity in it, actually. It takes a longer period of time to do it, but you get more clarity in it. Okay, so if you're in the gold market, this is important metal-wise, okay, because it's like, okay, man, you did a 50% retracement. You know, you went, what we also had done is this. We got out in the gold report at 1752. And we got out in, it was the month before it topped. We got out in August. And then, of course, it went all the way up to 1920, but then it closed in September at 1532. And what was going on then, that was almost a 1 to 2 ABC structure on the way up, because the euphoria was great out here, right? Okay, so that's where we are in the gold market. That's a decent place to be. Now, when you go into the silver market, you get a whole different dynamic. And this was a freaking heads up, man. So you take the silver market, and, you know, we do the same thing. And what you're going to see is that the silver market, okay, bottom line, did over a 0.786 retracement on the way back. That, the way that I look at that and the way that you should look at that is that you want to be heavier in gold stocks than silver stocks. Because what you have there, because the retracement was so heavy, it doesn't mean that, you know, you even have to go up to the highs inside the silver market, because that's showing much more weakness in the context of, you know, where we are on the pullback, you know. So that out of the, you know, and the workshop in general, I was looking at that, I says, whoa, that's intense. Because what we have had happen is, well, just like this. Well, watch, if we look at silver right now, you're going to see that, you know, bottom line is that it's having a tougher time than gold is, you know, at this particular point. You know, it just, you know, it looks the same here, but the volumes are different, meaning the volumes in gold are pushing these swing points with volume, and silver's not. And trust me, we want both of them to go. It just looks to me that the gold market has a bigger expansion if, in fact, metals are going to run and the dollar's going to give it up. So check it out right at the front page of TFNN, folks. You can subscribe for a month, 6 months, a year. Comes with a 30-day money-back guarantee. Check out the workshop.
Yeah, and as they're saying in the den, and Mike's saying 84-to-1 ratio of silver to gold, quite a number up there. And when you look at silver trading at like $15, right? Call it. You have the high up there at like $50. So to get back to 50, that's at least 3 times the multiple of the price, right? At 3 times 15 would be 45. Plus another 33%, so about 3.4 times the price right now. Whereas gold is trading at 1,300,
right.
The high is 1,900.
Right.
So you only need a 50% rise in gold to get to the price, the high.
Right.
You need a 333% rise in the price of silver to get to the high. It's pretty remarkable.
Yeah, it is. And you know that what may be here, and we'll see. You know, inside that workshop too, the biggest buyers of gold right now, and it's dramatic. Russia, Kazakhstan. Kazakhstan's been out there forever. Kazakhstan's been out there for the last 7 years buying. But Russia, huge.
Okay.
Huge. In Turkey.
Okay.
And that's pretty wild because of the aspect, that's all about trading inside the U.S. dollar, saying, okay, man, you know, we got to get gold, you know, because the bottom line is that that's a payment system. That's the bottom line. You know, gold is priced in dollars, so. We're going to take a look at the NDX. NDX right now is trading up 102 points. PayPal is up. That's got a big hit.
They came out with their earnings, I believe. They had Venmo was doing well.
Yeah. What is Venmo?
So I believe Venmo is just more of their online type, and I know PayPal is. But let's see what they say in terms of what Venmo.
So it's rallying 9.5%, beating third quarter estimates.
Let's see when we click on this, what they bring us to. When is this? Okay, so this article's from yesterday as well. Talking about the same time, monetizing Venmo.
Oh, it's a popular mobile payment service.
That's what I thought. Now what's interesting, though, is what is PayPal then? Because
yeah, right. I
guess maybe PayPal isn't just online, where you can do it via your desktop or whatnot. Maybe Venmo is really their focus on just an online. But yeah, so they boosted their outlook fourth quarter revenue, 4.2 to 4.28. Nothing too crazy, right? Yeah, so the CEO, Dan Schulman, working to squeeze value from Venmo, which is a hit among smartphone-wielding consumers, but has yet to turn a profit. So it must be just something that focuses straight on the mobile atmosphere.
Yeah. Let's see what else is moving inside that Nasdaq. So you get that's
Dense supply.
Yeah, that's up. Dense supply is up 6.7%. You get Kraft Heinz up 2.7.
Everyone buying some ketchup?
I guess so. Mercado Libre is up
one of your favorites.
2.7. Look at eBay. eBay's getting smoked. eBay's down 8%. Lowe's. eBay is almost a non-entity. I don't even think of eBay anymore. Oh, look at this. It's going to be an ABC down. It's blowing away the B point. And this must have been the last earnings. It was 17,
sure.
July 17th.
Sure.
Unreal. Let's pull this back a little. Whoa, that's a one-way trip.
Yeah.
$46. We're 29. And you're going to where it broke out from in July of 2016. Let's see, bring that back a little bit further. Yeah. It's had quite a run, too, though. That's the other side
definitely.
of it. So let's see what they're saying here.
Yeah.
eBay, cut. Let's see. Did they must have come up with numbers.
No, they didn't. They're coming up the 30th.
That's just a cut?
So, no, this is, I believe this has to do with maybe what PayPal, in terms of what we were just, I see. Yeah, eBay is collateral damage from PayPal earnings.
Oh.
So, yeah.
Wow.
Yeah.
You know what's going to happen, too. You see this?
I mean,
it
over
says
and over.
bye-bye yoga, $1 yoga pants from China.
Okay.
This deal, that, you know, the postal rate that China had, bottom line, when that's gone, that's going to be a big deal, I think, in eBay and SD. Because these companies, it was always blowing my mind that you can't order something from China. We get them at the house all the time. It's like $1.
So here's PayPal's earnings disclosed week eBay third quarter. So there you go.
Wow.
Because they're such a big player in there, probably.
Oh, I see.
There we go.
Stay right there, folks. Come right back.
Jason Path has
That's
just
right.
launched
It's
his
fun,
weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Paff's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now trading up 163. We get the Nasdaq up 74. S&Ps are up 20. And our man, Jim from Minneapolis, he wanted to take a look at
Hewlett-Packard.
Hewlett-Packard. So let's go take a look out here. So the low is $50, the high is 75. So they're coming out with numbers on the 16th of November. Let's see what we got here. Well, it looks like, I mean, to me, it looks like we got a consolidation. You know, the bottom of this consolidation is like that $57 area. We put this on a monthly. Yeah, it's been bouncing along here for a while. And if you're looking to buy it, 57's the number. So the top 68, you're already, you rejected the high. Let's see, that's a monthly, so I got to do this on a weekly. Let's see, 2-year weekly. So yeah, it's the same setup. So what you did is this. So your last high out here, February 2nd, 9.2 million. You came up to it, 7 million. You just came up to it with 6. So it's losing its energy trying to get into that area. That says it come back to the other side, which is the 57 area. Get over and take a look at the oil market out here. So oil up 1.4% today.
As we do that, was HPE Hewlett-Packard? Is that HPE? I saw a name up there. Can we just check that?
Oh, maybe it's something different. Oh yeah, it is. Sorry.
There we go.
Okay, so this is a
I just
oil
happened
stock.
to see the name at the end.
Yeah, it's an oil stock. Okay, so contract drilling in wells. Okay, so let's take a look. Yeah. Gulf of Mexico, South America. So the bottom line is that I wouldn't be buying it. That's how it's shaking out. And if you go look at the XLE is going to need more volume to break out the bottom. But this is building cause down here to try to break it out. You know, you'll see in the weekly too. There's not enough volume on the weekly. You see, last week we came down there with 113 million. Right now you're only at 61. You know, and what's saving it is actually the high volume low from February. The top of that. Look at that. The top of the 72.40.
Yep.
And you know, it'll take a bit to get in there because there were so many sellers at that particular point. Now, when you take a look at, you know, Chevron and ExxonMobil, they're not setting up well. You know, bottom line is that Exxon's off this high of 86. We take a look at this on the weekly, and you're going to see it couldn't make it by a downdraft. We're talking the same months. That's talking the same time. February. February's the number, man. I mean, it's like
across the board.
It's a broken record, exactly.
Is.
But you know, it really is the number. Let's look at this. Look at Chevron. My God.
Yeah, huge.
So Chevron goes from 131. Look at that. 131 to 80 to 108.
Yeah.
Like in a heartbeat.
In the span of 2 weekly bars, right?
Big time.
Yes.
Pretty wild, man. Let's go take a look at Google. So Google over in Europe, I was reading the way that they're setting this up. They gotta basically get rid of some of their operating system, but it's like what the article was about is that all they need is that we get Android operating systems for nothing. Well, the way that the EU set this deal up is that now they say, okay, well, you're going to pay for the operating system. Okay, so
as in Google needs to sell the operating system.
Exactly.
Right, so
because it's such a monopoly, right?
Okay.
And so what they're saying is that Google will probably get another suit because Google's has it masked and saying, well, okay, we'll put this app. So they're going to the spirit of what's going on, but the search and Chrome is all they really need, and they're still going to have that.
Sure.
and so they're saying is that, like you and I on the other side, well, we want it. Like, we want search. You know what I mean? Because they get the best search out there.
Sure.
You know? Let's go to our man, Tom in Plymouth. Hey, Tom, what's going on, brother?
Hey, good morning, Tom and Tommy. How you been?
Good morning, Tom.
Doing great, man. How you doing?
Pretty good.
Yeah, do you get some beautiful weather up there?
Starting to get a little chilly up here.
Yeah.
40 degrees right now.
40 degrees. That's hard for us to comprehend. It's been a hot summer, man. You know?
Yeah, it's actually kind of nice, but, you know, it's coming.
Yeah. You know, if it's 40 degrees, it's coming, man. I'd be a little freaking baby right now if it's 40 degrees.
November's right around the corner, man.
I know.
Yeah.
I know. So, what are we doing?
Well, I'm looking for an entry point here, and I'm thinking about jumping in on this SCO, short in oil. I've been playing around with it for the past week or two.
Okay. Let's take a look at
I
it.
think yeah.
So you get the ProShares Ultra Shot Bloomberg Oil Index. This is the 2-time inverse correlation, or the opposite correlation of this one's always tricky, man, of the daily performance. Okay, whether it's positive or negative. That's what's so weird about it. Do you know what I mean? Like,
I got lost in what you.
I believe me, I get lost when I look at this too, because what it is, it's twice the performance.
Yes.
Whether it's positive or negative.
Yeah, but that's not. I think you're getting caught up in it. That's how every multi would work. It can't just be twice when it goes positive without being twice when it goes negative. Do you see what? Don't get lost in that statement.
No.
Are we just shorting oil here?
No, this is not like a when you're dealing with a nugget and when you're dealing with a dust. Okay, one specifically is twice the positive, and one specifically is twice the negative.
Sure, but this is twice the inverse of the daily performance. But it's saying if it goes up or if it goes down, it's twice the inverse.
Okay.
That's just
yeah.
So you with me?
So it's still shot. That's the bottom line.
That's what I'm saying. So don't get lost in it's 200% of the inverse.
Right.
That's it.
Right.
Very simple.
Right.
Yep.
So if we take a look at this, you got the.
And it's the Bloomberg Crude Oil Subindex is the one that it's based off of.
Which we don't know what it is.
We can probably pull that up. We have a Bloomberg terminal. Hopefully we can pull that.
So, yeah, I'd let this back down a little, I guess. I mean, here's the supply line. It's laying right at, 1480, you know? It's like, if this... Well, here, let me pull this. See if I can see what's in there. Yeah. Crude oil. I guess it's crude oil, then it's cash.
When you roll over it, it'll tell you what the difference one. Yeah. So that's a Citibank crude oil subdex. That's a swap. You can see how it's tiny, but I can kind of read what.
Yeah.
Let's just even see if we click on one of them. No, it's not going to bring us there. Okay.
So, you know, Tom, I wish I could. This one here always baffles me. That's the real bottom line, because I don't really know what's in it. You know, I mean, just even bringing this up, I understand that. Yeah, it's the crude oil index, but it's like, okay, well, you bring up the holdings. It's like, okay, are we talking equities, or are we just talking the crude oil itself? You know what I mean?
Yeah, I thought it was just crude, but I could be. I guess I better do a little research too. But
I don't know.
So here, let's see what's Bloomberg WTI crude oil subindex.
Okay. Oh,
the description.
Okay. Composed of future contracts on crude oil. Okay, cool. Here, stay right there. It reflects the return of underlying commodity future price movements only and is quoted in USD. Stay right there, folks. Tom.
Three Toms coming back.
Tom, we're all coming back. Come right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Okay, hey, Tom, we know what it is. Okay, so it is the January oil contract that you're actually trading. It's 100% weighting inside the January contract. So this would there's not a big difference. Okay, you get the January contract trading at $69. The futures contract this at 82 cents, and we're on the November contract right now. It's at 69.62. So bottom line, just trading that future. You know, now looking at this, if you know, which is pretty cool. What I would do, I'd still wait. I'd let this bin. You know, it looks to me like you're gonna get a little bounce. I mean, and you know, you're at 69. You know, can this thing get to basically 72 again? It'd be great at 72.
Because again, just reminding people listening, 200% of the inverse is right instead of trading it. But yeah. And
then if we go over to the SCO again, which you're looking at. That would basically bring the SCO like right back down to the 1380 number. Do you know what I mean? Which would make sense. That's where the strength was on the way up. Oh, but look at this. Okay. That's interesting too, though. Yeah, but you get a little ABC up too, though. You get 12, 20. You get 230, which gives you 15, 16, 10. Yeah, it's interesting because you got a little. Basically, ABC structure up to $16.10 too. I'd wait.
It hasn't been moving like it used to move. I mean, in the past couple of weeks, it moved a little bit, but not like it used to. And I'm kind of hoping that I can get it somewhere between 13.30 and this price here, maybe. And
yeah, I think that'd be a good scene. Replacement frequency daily, yeah. You're trading a contract in July and January. That's how that thing shakes out.
Beautiful.
Cooking, brother.
All right, well, go Red Sox. And if you get a chance, check out our SPXL for me. See what you think. I got in that yesterday afternoon, and
so
it's up a little bit today. But.
Yeah, this is the the S&P 300% bull position of the S&P, and I think that's a good position for today. I'd get rid of it at the end of the day, but I think that's a decent position for the day. You know, I mean, my larger take is that we're still in an ABC structure on the way up. Now, what's going to get cool out here today, folks, is this. So picture that this is the yin and the yang.
Up or down?
ABC down.
You set up. Okay.
Yeah. Okay.
Oh.
Yeah.
So the way I'm looking at this market, right, and this is what you're going to get today, which is pretty cool. We should get volume in the marketplace. So picture if we end up trading up and we can't get volume, then the indication goes even heavier that you're probably in an ABC structure on the way down. That's one way. Now picture the other way. Picture if the market gives it up. If the market gives it up, like it did yesterday, you basically, and you go down and you have light volume, that's still saying that, guess what? It still wants to bounce. You know, so that's the market today, I expect, is going to give away quite a bit of information because of that. You know, no matter which way it actually goes. You know?
Okay. Yep. Sounds great.
Okay, man. Have a great one. Have a safe one.
Thanks, Tom.
You too.
40 degrees. That's pretty good, man.
Yeah, just like us, ours is a little different, as in we're going to skip kind of fall weather almost.
Right.
You know, by the time the heat cools down, you're going right to, and ours is a lot warmer than Boston, but in the same respect, they've had a lot of heat, and then they're just kind of flying through their fall. But beautiful colors up there, but flying through that fall, because you get to November, man, fall is gone, as we know up there.
Yeah, Columbus Day is when it seems like you get Columbus Day, and once it rains after Columbus Day, it takes all the leaves off the trees, right? Bitcoin, still no action in Bitcoin. 63.78 laying out in Bitcoin. Let's go to our man John in Philly. Hey, what's going on, brother?
Hello, Tom. Tommy, thanks for taking the call. How are you guys today?
We're doing great,
Morning,
man.
John.
How you doing?
Very good, thank you. Tom, thank you for giving your 2 cents, actually 4 cents, on this short covering rally. Wanted to ask, could you please pull up the S&P cash, not the SPY,
Yeah, okay.
not the futures,
The X, I got it.
but the SPX cash.
Yeah.
I asked you to put that on, I don't know, 10, 15, 30-minute chart going back 3 weeks. And could you draw a trend line off the highs and notice where it comes in and comment for me what you make of that, please?
Yeah,
There's a 30-minute going back a few months. We're not getting that volume is a little weird because there's too many bars.
Yeah, that's all right. So
Even put it on an hourly or something and see what.
I can go
60-minute.
60-minute, and I'll go 20 days.
I think it's going back a little further. Yeah.
Okay, so I'm not.
Right, I'm in Tiger TV. That's the chart. If you would draw trend line off the highs going back into October 3rd,
Okay.
notice where that comes in, and does that mean anything to you? I know it's just lines on a chart.
Oh yeah, no. Let's see.
But
Just lines on a chart,
Yeah.
John. Come on. No.
Oh, that's cool. Oh, look what he's looking at. Oh, that's
Yeah.
pretty cool. I like it. Start calling you Bud Rolfs. No, this is cool.
So-
And what he's looking at, yeah, I see that. We're right at this trend line from the highs, folks. And it failed.
Twice.
Yeah, it failed on the.
That was Wednesday.
On the 17th, yeah, and we're right at it right now. Yeah, no, that's pretty cool, John. There's no doubt. And you know what's cool about this is that if you break it, folks, right? What happens when you're doing ABC structures on the way down or the way up after big moves like we have? So picture, we had the big move down, and you're doing the B to C of an ABC up. The question always asked is that, okay, well, how do you know whether you're going to do a 0.382, a 50, a 618 in the correlation of the expansion-contraction theory? You don't. That's the bottom line. What you got to do is you got to do your best as to saying, okay, I think I went into the swing. I think it had a lighter volume. Okay, so it's a speculation. Now, what's cool about what you're doing here, John, right, is this. So my take is that I think that we're going to do about a 618 retracement because of the way that we came off the bottom and because of the way that we did more than a 1.618 on the daily on the way down, John.
Mm-hmm.
So what I would look for here is this. If this breaks with conviction, okay, then it'd be like, oh, man, you probably don't even have an ABC down. If it breaks without conviction. Without conviction means, folks, that it just meanders over it. It doesn't have wide price spread. It just makes it over. It doesn't have the volume. Then it'd be game on. Then it'd be like, okay, man, here we go. It's going to crawl up to the 5.0. It might crawl up to the 618. And then what ends up happening, you have the aspect that your probability is much higher. You get an ABC structure on the way down. So that's pretty cool how that's set up, man. Because if you break with conviction, folks, what that would mean is that you can go all the way up to the high again of 29.37. You know.
What if one last question, Tom, and thanks so much for doing all that. You answered my questions. What if we turn lower by 10 points right here, right now? Does that tell you anything as you see it, please?
Yeah, because if the volume's not high enough, it's just testing the lows again. See, that's what I love about today, John. Okay, because what happens, that market's gonna here. Stay right there. Tommy, John, myself will come right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And so on the S&P, we had option expiration. So as John just asked, if it goes 10 points down, what would you think? And that's what's so cool about option expiration, because either way we should get volume. And if we go 10 points down, the real question is going to be, yesterday, folks, we were just testing the heavy, low volume, high volume bar, but the day of the 11th. that would do the same thing. That's what it would do. And if that test is on lighter volume, that would be saying, as yesterday was lighter volume. If that test was on lighter volume, and then on top of that you have option expiration, that would be saying that the bounce is still on. You know, so it's kind of, this is, you know, basically really interesting out here today. You know, if we went dramatically higher today, meaning that the S&P is up 19, if we could go up by 30 and you had light volume, that would bring the probability much higher that you get ABC structure on the way down, because we should have heavier volume and option expiration. You know, so you want to take that into consideration when you look at this market. You know, I can tell you what is impressive. When you start looking at Procter & Gamble, though, pulling in those kind of numbers, you know, as we're coming out with numbers, we probably have a few more surprises out here.
Yeah.
You know, that's a big number, man. And it's particularly a big number because they're a monster, and a lot of their brands, you know, have got hurt in a big way. You know, I mean, they bought those brands a long time. Well, they keep buying brands, but bottom line is that that's impressive.
Yeah.
Stay right there, folks. We got Fast Market coming up next. Then we get our man, Mr. Basil Chapman. Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, Bill.
Thanks, man.
Wow! Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.